Let's go. Tell me.
What's up, guys? How's it going? We are live, not at CES, but we are live from all of our offices across the world, and we are going to be covering Zeta CEO David Steinberg's interview on the C-Space Studio. So, if you're new here, if you don't know what's been happening, if you're living under a rock, this week Zeta is getting on the map. Some of the biggest investors out there in the community and YouTube and X and all these spaces are starting to really recognize this name and starting to catch on. We've had Amit, which is a huge retail name, starting a position a couple weeks ago. And I had a initial spaces with him and stock talk, which went really well. And just, we've been seeing this hype, and I don't even really want to say hype. I want to say more so the story of Zeta coming to the forefront. So we're going to be watching this in a little bit. I'm joined by my guest, Knots or Nick, Nate, and also Sam. What's up, guys? How you doing?
Yep.
Pumped and excited with the gains.
Heck yeah.
I mean, it's been 3 trading days and it's up, what? I don't know, 25%? Something ridiculous.
Yeah, it's like 40-some% over the last month or 3 months or so.
Wait, this is for Zeta, the company? I thought this is for Zeta, the crypto coin.
No, it's a crypto coin.
Oh,
I told one of my friends, I was like, you better be buying Zeta. And he's like, crypto? No, not crypto.
Every time there were a couple of times when I typed in Robinhood Zeta, and of course it defaults to the crypto coin. I'm like,
yep.
I'm like, what happened?
By the way, I'm not gonna lie. I literally just found out that there is a crypto coin named Zeta when you said that. I did not know that.
I bought it. I want to make sure I had all my bases covered. I needed just in case.
Give me all the Zetas. All the Zetas.
Maybe who knows? There's David. There's David.
He's quick, bro.
That's my guy. That's my guy. I told him he can stay with me anytime he wants if he comes down to South Carolina. I got a guest room for him.
See what happens.
Oh man, I'm really excited. This is his first interview, right? We're gonna hear the interview with man, I just blanked on his name. What the heck's his name for later? The other interview he's doing.
Dan Ives.
Dan Ives.
Yep.
Yeah. You know, I agree. This is a big moment for them. I think this puts them on the map with a lot of investors, a lot of enterprises that don't even know Zeta. Anytime you see OpenAI,
when does that one come out? So. The Zeta one. I mean, the Dan Ives one.
I think at 3:45.
Yeah.
Okay.
3:45 Western, so 6:45 Eastern.
Yeah. So in an hour. So they're gonna bang bang. They're gonna bang bang on this thing just back to back. So, all right, here we go.
Hey, welcome back to the C-Space Studio. I'm James Kotecki here at CES 2026, and I'm here with Zeta Global's co-founder, chairman, and CEO, David Steinberg. David, welcome to the C-Space Studio.
Thank you for having me, James.
Okay, so define Zeta Global for us for a second, and what brings you to CES?
Well, first of all, we're at CES for the same reason a lot of people are. Everybody's here.
That's exactly right.
Yes. But Zeta Global is a big data and artificial intelligence platform company, and our software helps very large enterprises more cost efficiently run their marketing and CRM.
Yeah. And so tell me about what that looks like in practice. Give me some examples of how that might show up.
We help very large enterprises to better manage their marketing. So Forrester did a study recently that for every dollar that an enterprise spends on our software, we return them between $6 and $7 in revenue.
Wow.
So 600 to 700% return on investment by using our software and our data.
So does that imply that there's a lot of inefficiency that's happening before you show up? Tell me about where some of the biggest inefficiencies are that you're addressing.
Yeah, by the way, I wish I could say it's just us being exceptional. That's part of it. But a lot of it is, and if you think to sort of the crux of artificial intelligence, a lot of people are talking about AI. Yeah. At Zeta, we started programming in artificial intelligence in 2017. Mm-hmm. So what we're really able to do is target an individual who's not just actively in market for our clients' products, but we can put other pivots on top of it. By way of example, This person might be very interested in your product, but they can't afford it.
Yeah.
Or they won't get credit approved for it.
Mhm.
We're also able, when you look at a lot of marketing today, a lot of it is just retargeting on the internet. So you click on something, you buy it, and they follow you around for 2 weeks with an ad. The crazy thing is, a lot of that is massive inefficiency because you've already bought the product.
Mhm.
Because we plug into our clients' CRM systems, we know you just bought. So we remove you from the marketing to save our clients money. Those are just some examples.
And then how does that show up for the way that your clients are using it? Is it an LLM? Is it a report? Is it plugged into the CRM that they're already getting? Is it writing along? How do they actually experience it on their screen?
Yes.
Okay.
We have one user interface that allows a client to do 3 main use cases: customer acquisition, customer retention, customer monetization, and all of the activation for any digital methodology, whether it's programmatic, video, connected TV, mobile, social, all runs through our platform. And then there's one reporting interface that gives you attribution for every single spot you ran, all the way from the beginning of the journey to the purchase of the product.
You said that you've been doing AI for almost 10 years now. Are there things that you've learned about AI that other people haven't caught up to yet? Are there things that you know about it that people right now are just now finding out?
Yes, by a lot. And obviously I'm CEO of the company, I have to say that.
Yeah.
But the truth is, if you think about the future of AI, and I think people forget this, 100 years ago, there were about 1,000 companies in America manufacturing cars.
Yeah.
Today, there are 5. You're going to see a very similar thing in large language models. They're going to become very ubiquitous. There'll be a few major winners, and there'll be a lot of people who do not win. At Zeta, what we have found is that the data that you feed into the algorithms is the biggest differentiator. And what we're doing is we're taking our clients' first-party data, we're merging it with our first-party data, and the algorithms are learning off that in a very private environment that never has any data exhaust. So we're actually on our 4th version of our AI agent studio. Our clients have built thousands of custom AI agents on top of our platform by using our agent studio. Most of our competitors are on V1.
Okay. Tell me about what the definition of agent is in this case, because my impression is people use the term to mean different things, and different levels of autonomy are implied by that depending on who's saying it.
Totally. I mean, now some people are calling bots agents, right? I mean, if you think about it, to us, an agent is performing a singular task as a component of a supply chain or a process chain. In this case, let's talk about marketing, right? So we might have one agent that will literally look at every customer you've created in the last 30 days, look at the 240 million Americans in our data cloud, and say, this 2 million people are doing that exact same thing.
Okay.
Another agent might say, here's the best place to target them. The coolest thing about our platform is we've strung 3 full agents together. The 3rd agent in real time is informing the first 2 with an attribution capability.
Okay.
So they're all getting smarter. And we just announced that we're rolling out Athena, which is our voice-enabled conversational super agent that'll control the entire platform. And yesterday, after the market closed, we announced that we've done a full partnership with OpenAI, and we're going to be integrating Athena as native to their application layer.
Okay. So with all of this, then, what is your philosophy around the role that humans will play now and in the future? I mean, are we getting to a point where it almost doesn't make sense, even for an expert in all of this, to do any of the work, because the AI agents will just be better because they have more data and they're faster and they're smarter?
I think you're going to see execution be all AI driven. I think as it relates to strategy, as it relates certainly to customer relationships, I think you're going to continue to see humans very, very focused there. I think as AI evolves, and I think it's going to follow a similar pattern to Moore's Law, we're going to see a true doubling of AI compute every 18 months. I think you're going to see it taking on more function and more tasks where humans really are mission critical, other than in strategy and customer relationships, is in highly regulated industries where you're focused on financial services, health and wellness, insurance.
Where hallucination is worse.
Well, where it's massively regulated and could be a major problem. Now, of course, what are those three things? Healthcare, financial services, insurance. They're number 1, 2, and 3 in GDP in our country. So it's humans are going to be involved for longer than I think most people think.
Tell me about generative AI and where you think the current state of the ability of generative AI to do creative and how people are responding to that is.
Yeah, I think generative AI is just getting started. I mean, if you think about it, you've got large language models and you've got small language models. We really believe in mid-sized language models.
Okay.
And I think that's where generative can really excel. I think the real tipping point for generative AI is going to be the combination of quantum computing and generative AI, where you're going to be able to get, I believe, 10 times smarter, 10 literally orders of magnitude smarter when quantum has AI sitting on top of it.
Okay. In what sense, can you give our audience a quick definition of what quantum means in this case?
So quantum computing, quantum computing is the move from linear binary coding to non-binary, where today all we're doing is speeding up processing power. And it's fast, right? I mean, compared to the 1950s, you know, processing power, right, exactly. But it's still linear. It has to, you know, if then. A quantum computer can move in multiple directions simultaneously and come together with one solution. So it's able to do things that today binary machines can't do.
When you look at how consumers react to all of this, what are you learning from how consumers interact with LLMs, interact with the advertising that you're helping to do?
I think consumers are interested in better information. And I think consumers are interested, if they're going to see marketing, they want to see marketing that's more relevant to them. And I think artificial intelligence is really the next leap. At least it has been for us. I mean, to put it in perspective, if you look at our business, we've grown it on a compounded growth rate of over 30% a year for the last 3 years, grown profits by greater than 50% compounded, and free cash flow by greater than 75% compounded. That's because of AI. You've literally seen artificial intelligence change the game inside of the way Zeta operates.
Does it feel like science fiction to you, any of this?
Every day. Like the stuff that I get to do and the stuff that I get read in on is just unbelievable to me. But if you think about it, people ask me all the time, James, what was sort of the moment for AI, right? And to me, it was the launch of ChatGPT, right? Which is why I was so excited about our new partnership with OpenAI. But that was the day that artificial intelligence went from science fiction to boardroom conversation. But they blend. The stuff we talk about is stuff that I used to see on Star Trek.
Yeah.
We're now doing that.
Certainly those conversations with the computer, right? That's one big part of it.
If you look at Athena, that's exactly what it is.
And it's interesting because when we think about what is the moment for AI, maybe that moment hasn't even happened yet. Maybe the real moment is something that you and I will be talking about next year or in 5 years. And we're certainly excited to have you back to have those conversations.
Well, a lot of people think that really once we get to singularity, that will be the big change. I actually think it's a little further off than people think.
We're going to do the Singularity Studio maybe at a future CES. That would be
cool. I agree with that.
David Steinberg, co-founder, chairman, CEO, Zeta Global. Thanks for joining us in this.
Thank you for having me, James. I appreciate it.
And we really appreciate you watching us here.
All right, there you have it. So I'm not going to lie. I didn't love the questions. I understand that we're just getting Zeta out there and there's a lot of newer investors watching this and people don't know. So he did really well at covering what Zeta is, who they are, and what they do.
Yeah, it's just basic knowledge.
Basic knowledge. I really wanted to hear, and hopefully at his interview, his next interview in an hour here, or less than an hour, 45 minutes or so, I really hope they touch on this new, Zeta announced the whole generative engine optimization, which is going to effectively replace search engine optimization and basically, I believe, take market share over the coming years. They announced that in September, but now this partnership with ChatGPT is much bigger than what people think. And this is, I talked about this on my video yesterday. I know Wealthmatica, Nick, he's been talking about this a lot. He actually was the one that, man, he does very, very finite detail, ladies and gentlemen, very finite detail. So definitely be following Wealthmatica on X as well. He also interviewed David Steinberg, the CEO. But with the generative engine optimization, the whole thing there is going to be, you're no longer searching for things as much on Google. So it's no longer collecting that data to spit ads out back at you. Now we are more so prompting ChatGPT, Grok, and there needs to be a way for them to understand what you are looking for, what you want, and to place the ad in front of you. That is why this is so big. Zeta is a first mover on this. Like I said, they started this in September. They've been working on it before that, but they announced it in September. And that is why this partnership with OpenAI is so massive, because they're doing that with OpenAI. So OpenAI and Zeta are first movers on this whole spinning up ads in the generative AI world, right? With the prompts and everything. And that is why it's so big. That's why when people are commenting, oh, it's just another partnership with OpenAI. No. You don't understand. This is a new groundbreaking thing that is going to completely change the way that SEO works forever. And maybe replace it. But let's hear from some of our other guys on the panel.
Yeah,
what did you guys
I would
think?
agree. I was looking forward a lot more to any Athena conversation, any OpenAI partnership discussion, just anything a little more in depth. I think, like you said, after the announcement of the partnership, I think the goal here was just to get the name out, spread the word, kind of just give a basic understanding of what Zeta is. But yeah, I'm fully aligned. I think this partnership's huge for them. Like I said, it puts them on the map. A lot of enterprises might not know Zeta. Some do, but a lot don't. A lot of them know CRM, Salesforce. A lot of them know Adobe. And so I think this puts them on the map for a lot of businesses, just like a Palantir AIP did, because AI is the whole new crave. And so if you have anything, LLM related, anything AI related, it puts them on the map. And so I think that's the big piece for me. And so I was looking forward to something around there, but I do get the point of it. I do get they wanted to kind of just get the name out and cover the basis of who Zeta is and what they do.
Yeah, it just seemed like a basic overview.
Yep.
I think the Dan Ives one will definitely be more, into like really what they do, what they're doing now. Athena, maybe financials. I don't know, but probably not financials, but definitely just about the product.
I'm ready for that $120 Dan Ives price target. He always
Oh,
comes
literally.
in with
Tomorrow morning.
Price targets. Yeah.
Tomorrow morning, Dan Ives, $75.
Now part of my AI top 25 stocks.
Did he make it part of his AI stock?
Not yet.
I
don't think he's officially made it official.
He's
but
gonna. He just
I feel
needs
like
that
it's
pink
kinda-
hat.
yeah.
Well,
He just
a
needs
lot
that
of
pink
liquidity.
hat that he wanted.
I
I
think
do
That's
like
a lot of liquidity
guys-
coming in if he does.
Yeah,
that.
you guys make really good points there. It definitely is about getting the name out there. And I like, did you notice the first thing that David led off with? The $6 for every dollar spent,
Yep.
we are returning $6 to our customers. That is huge. So anybody that is watching that, they're immediately going to perk up them ears, and it's going to be like, the first 30 seconds is the most important. So if somebody was watching that when so much stuff is going on at CES, hopefully, maybe they pick up some new clients from that, because that is the comparison, the biggest comparison to the AIP moment for Zeta, just like it was for AIP for Palantir. And that's why most of us, right, we keep saying there's a lot of similarities with Palantir. I know we throw around a lot of clickbaity stuff, right? But that's the way of the world today with the attention grabbing. But there are a lot of similarities with them about to flip to profitability, which they would already been there last quarter if it wasn't for the acquisition, which amazing acquisition, by the way. But what are you thinking, Sam?
With these interviews, because I've seen so many software interviews at this point, they stay very high level, especially like a 15-minute interview. Like they're not gonna go deep at all. And I don't think it's gonna go that deep even with the Dan Ives one. I mean, like, when was the last time you've seen like even an in-depth interview on like CNBC, right? It's gonna be the the same level of complexity that you see with a lot of those. They're probably going to talk numbers because, you know, that's what Wall Street likes to hear. That's probably what Dan Ives and his entire modeling team looks at. They look at the numbers. They're probably going to call out the guidance for later on. But as far as like the technicals go, like I think it's going to be high level. I mean, it's just, yeah, they might get into a little bit of like a 2-sentence white paper on like Athena. Maybe they might get into the geo stuff. I don't know. We'll see. Chances are they're not going to say anything that has to do with things that were not already publicly announced or that are not like flashing public knowledge. It's possible they might make, actually, no, I don't think they're going to make a product announcement. But you know, the good part is, like you were saying, is that there's a lot of awareness on Wall Street. There's a lot of awareness in the retail community. And I mean, things are looking good, right? Like I think a lot of that has to do with the outperformance in terms of the price action. Like I don't know how much it's up year to date, but it's probably somewhere around like 20%, maybe, yeah, probably like somewhere around 20%, which is definitely outperforming a lot.
17%. Sorry, cut you off.
Oh, okay. No, it's all good. It's all good. Yeah, I mean, like what a lot of those memory stocks like Micron and whatever, Micron's like 24% or whatever, probably more now. SanDisk 42%. So like think about that whole list, right? Like that's pretty up there for 3 trading days in. And that hype and momentum has to keep up with the market in order for it to be sustainable, right? Like I think like if it drops like 10% from here, the hype is probably going to wear off very quickly. But I don't think that's going to happen personally, as long as the market stays bullish. But I mean, I think it's good. It's knowledgeable for your average investor, right? Like who needs just like the quick white paper on Zeta, because generally speaking, and it's probably not anyone here, but people hear like 2 paragraphs and they're like, all right, I'll buy it, right? That sort of thing. And it doesn't end like the more liquidity you have. Like there are people with millions of dollars that do the exact same thing because it's just proportional to how much they have. And you know, Nate owns like half the float in the stock, so you know, I'm sure there's not really much to buy anymore because he's probably not selling. No, but in all seriousness, I don't expect it to go like too deep, and I guess that's kind of good because it makes people do their research. But the awareness is definitely good.
Yeah, I mean, you can either become very rich based on who you follow on X and YouTube just by their 2-paragraph thing, or you become very, very poor. So it's definitely better to just do your own research, take whatever anybody says with a grain of salt, and do your own research, have your own conviction, because, you know, some of us have been calling this name out for a while now, and it's been a crazy ride. I know, like, I've been an Oscar too, and that's been an absolutely crazy ride. 3 times of basically over $20 back round tripping down to like sub 15. It's a crazy stock. Zeta hasn't done that kind of volatility, but it has been very volatile. It's been over $20 a couple of times, and it has round trip back down to 15, 16. Every single time you're sitting there and you're like, yeah, it's still a buy. I think it's still a buy today at $23.86. Depends on.
It was $35 in November or April.
Yeah.
So it's done a little bit of
I mean, this thing absolutely tanked. It absolutely tanked. And the reason for it was a lawsuit and a short report, right? So kind of like Wealthmatica put out there today, and what I talked about a couple months ago was, you know, there is this cloud over Zeta's head. And if we really want to see the stock price really appreciate over the next months in, you know, the rest of 2026, we really need to continue to get these dark clouds over, you know. So basically next quarter, if they come in and they have a profitable quarter on net income based on GAAP, great. That's another cloud that's over their head that gets cleared out. And then obviously one of the biggest ones is going to be that lawsuit. When me and Nick here personally talked to David, he personally said to us that, you know, he said we could quote him on this, that it's a frivolous lawsuit. And, you know, and that doesn't mean we just dismiss it because the CEO is telling us it's a frivolous lawsuit. It doesn't mean we just ignore it like some people post out there thinking that nobody's thinking about that or talked about that. But simply put, you just have to look into it, understand it, and understand, okay, if they're found guilty, what happens? If it's dismissed, what happens? If they settle out of court, what happens? And at the end of the day, based on where the stock price is, based on where I have the valuation at on my personal projections, it's priced in that and more, even at $23, in my opinion. It's priced as in they are going to lose the case, be found guilty, and have to pay them whatever, and then, you know, get paraded around and oh man, shame on Zeta. Even though the whole thing about it is it was a company that they acquired, and then as soon as they found out that this was an issue, they nipped it in the bud. So, you know, some people are like, well, if you acquire a company, you should know every little detail about every little thing, and it's just not the case. Something, you know, you can't tell if someone's a bad apple until they show you they're a bad apple. So that's another thing. And then the fourth thing that a lot of people say is the stock-based compensation, which you know, you could say that pretty much about any growth stock, even Palantir. They're still doing a lot of stock-based compensation. But if the growth is there and they're continuing to go higher, right? You just got to kind of look at that. You can exchange the growth for stock-based compensation. But the biggest thing is they are addressing it. They are continuing to bring that down, and they are continuing to they have promises that they've laid out in their quarterly reports that they are going to continue to see this through and get it down lower and lower based on their revenue. So
I've always hated this SBC conversation with any SaaS name. In order to get culture, you need top talent. To get top talent, you need SBC.
Yep.
And so it's just a byproduct of investing in software and high growth in general. And so as a bear case, I've always found that to be silly, especially when you see the company trending towards profitability every quarter in and quarter out. Another thing too, just to think about from an investor perspective for Zeta, we won't really see much, meaningful revenue growth from Athena, and probably until the end of this year, or even probably starting next year. It's in beta until around correct me, I think Q2. He said it's going to go
and
to masses.
the Q1
maybe? Yeah.
They're going to officially launch it. So yeah, Q2.
Yeah, so it's still in beta for the next, at this point, another 3 to 6 months. And sort of just like an AIP, again, like Palantir, we didn't see much meaningful revenue growth from AIP until the tail end of 2024. It came out, and I think in Q2 or Q3 of 2023. So again, I think people thinking that you're going to see some massive exploding growth next quarter because of Athena, that's not the case. It's still in beta, and it won't really become for all businesses or enterprises until I believe Q2, like you said. So June is a certain.
Let's hone in on that right there a little bit.
Yeah,
we're not going to really be seeing that growth, but they guided for 35% revenue growth in 2026. 35%. Those are Palantir level numbers, guys. Again, I hate to keep being like the Palantir comparison, but there are a lot of comparisons here, guys. And when you get companies that are doing this, they could see that level of stock price appreciation like you saw with Palantir. That's more so the comparison. It's more so the comparison of what are they doing, where are they doing it, and how could it impact that stock price at the end of the day when people really start catching on? Because they've been doing 20% plus revenue growth for years now. They're going on their 17th straight quarterly earnings beat and raise. They guided for 2026 earnings for the year in 3Q, in the third quarter. Like, who does that? So they are what Wall Street honestly loves. And I'm just waiting for like Wall Street to really sit there. And another kind of dark cloud over the head right now that not a lot of people are talking about. What do we know about SaaS companies? What do we know about where they're at right now in the cycle of things? It's pretty bearish out there on SaaS companies, right? I mean, you look at ServiceNow and Adobe and all these other SaaS companies, Salesforce, everybody thinks that AI is just going to completely replace them. Now, I don't believe that at all. I think it's going to spin them up and make them more profitable businesses that are already super profitable businesses. So their PEs overall have taken a hit. And yeah, I just think that's another thing that once you do get that multiple expansion again in the SaaS industry, then you see Zeta growing at 35%, and you're going to be like, wow, let's talk about the king of SaaS right now, Zeta. So what else we got?
Am I still lagging? Let me know.
No, you're good.
Okay. So to go back a little bit on the SBC, I think I broke this down a few times. I mean, you guys probably already know anyway, but their SBC growth rate is actually, it's not just decelerating, it's actually decreasing, which means that if you can compare the SBC in dollar amounts, it's actually smaller than what it was every quarter. So whenever they report their SBC, it's how much in dollar amounts they issued to whatever was stock-based compensation, rewards, whatever, for that quarter alone, if I'm looking at the quarterly trends. And last quarter it was down 2%. The previous quarters, it was down like double digits. So if you also look at the SBC as a percentage of revenue, which, looks like David posted about you, someone said. Ron.
Oh yeah.
The revenue, the revenue actually recently grew about 26% last quarter. SBC, of course, decreased 2%. And if we reaccelerate growth or revenue to 35%, which is what they're projecting for, and the SBC is decreasing, then I think that argument is irrelevant, right? So you have other companies that are increasing their SBC on a year-over-year basis, but still outperforming the revenue, which, for example, Snowflake, and that's been like a topic about that one, which is still a problem, but Snowflake is in a very competitive industry. Of Zeta, obviously it is a competitive industry, but it's not nearly as competitive as data or as demanding when it comes to building like an all-around technical application. Obviously, Zeta is a technical, nearly as complex as like a Snowflake or something, right? Why don't you bring up what he posted about you? I'm curious. I'll post it about all of you. Wait, what?
Posted all of us. Yeah, he posted a screenshot of all of us watching.
Yep. Hold on.
No way. Let me see.
Yeah, I'm just commenting back to him. Hold on. I'm just saying we loved it, David. Great interview.
That's awesome.
I won't be too honest. It's not his fault. The guy didn't ask about GEO.
Too bad Wealthmatica wasn't here. He would have really appreciated being here.
For sure.
Anyways, I mean, I've been invested in software stocks for a long time, and I work in the industry, and you could just tell like when an application is just not really going to make it. And enterprise experience with using Zeta, I've taken a look at it. I've taken a look at the reviews and stuff, and like people have nothing but good things to say about it. But also on top of that, when you see that their client growth in accordance with like large clients expanding on the products and the cross-selling, that's definitely a good sign that they want to pay more for the product, or they want to or they definitely want to unroll more clients as well. Like there's a lot of companies out there where that's freaking awesome, dude. There's a lot of companies that's awesome. It's like, wait, hold on a second. How'd you post about us? You're in the middle of an interview. You know, that guy's probably like running over to the Aria right now, unless he's already there. And he took the time out of his very busy schedule to take a screenshot of our stream and then post it on there. Like, that's freaking awesome, dude.
Sam, he also highlighted the guy on the bottom left is a very handsome gentleman.
Yep, he did.
Hey, baby, man,
not
what's
one,
going on?
not two, 3 rockets. Let's go.
Nice. Let's go. That was like, see, he is literally bolting over to Aria right now. Like, you just imagine, and like in between all those like people stopping him, whatever, with like interviews and whatever. But I mean, it's good to see the inflection of profitability when it comes to Zeta. There's a lot of software stocks out there that are not even close to profitability, that are hitting new all-time highs and trading around 15 to 20 times EV/NTM sales. And when I look at this one, like 4 times accelerating revenue to 35%, 30% plus next year, going to be profitable very likely next quarter and the following quarters after that. Like, it's just a no-brainer at that point, right? And the SBC is addressed. They're already part of the demand side platform industry when it comes to advertising. So people are able to scale out their advertising real estate purchasing on the application itself, you know, and they're obviously going to build upon that because they're expand further into it. You know, just like, I don't understand how this price was so suppressed for so long. And I'm glad it was, because I was able to get in at a lower price. Like, obviously not as good a price as probably you guys got. But I mean, I'm not going to complain about missing like a 10% move or whatever after it's up like 3 times from here. Like, it's not going to be a big deal to me. So,
yeah, I really think it's just the profitability that held it down. Obviously, the lawsuit was the big piece that happened in early 25. And then I think from there, the short report. And then it just becomes, oh, they're not profitable. And so from then on through, I think it's really just on profitability. And just keep in mind, too, in terms of profitability, I don't think we'll see, I mean, we could. I'm not a market predictor. But with SoFi, HIMS, Palantir, you didn't really see much of a run-up until about 2 or 3 quarters after profitability where it's consistent. So the first one could just be a fluke. Oh, you know, they sold off an asset, or they hit gap profitability before they expected, but they weren't free cash flow positive, whatever it could be. I still think it's going to take a few quarters of consistent profitability for then the market to wake up and go, oh, okay, they're here to stay. The same thing happened with Palantir. They got profitable, and it was like a surprise. The market, I actually think, sold it off, if I remember, which was insane, or it went up 5%. And then the second, and especially the third, it exploded. And so I think just keep that in mind as an investor, too, with Zeta. It's going to take a few quarters, in my opinion, before we see crazy momentum. But again, I could be wrong. It could be this OpenAI was just the spark, and then the next thing we're going to see is profitability. Then the next thing we're going to see is the lawsuit being dispelled, and then from there it's rocket ships. But just want to keep that in mind as well as we think about Zeta.
My
Yeah, we're gonna get
superpower is
full rock shipping when it
using
happens, not three.
my superpower is literally using free cash flow to get ahead of the profitability flip. If you do a simple discounted cash flow model, use conservative assumptions, and just extrapolate out their free cash flow, which is much harder to navigate through and tweak the numbers and everything, you can quickly find Palantirs and Robin Hoods and Zetas at a very, very reasonable and sexy stock price, honestly. So free cash flow is definitely disrespected in the world of Wall Street. They look at it, but it's not their go-to. They just want to see that gap profitability before they get in. But that just means that it gives us a very, very good opportunity to get in early. So,
Yeah, I mean, because you're talking about free cash flow, if I'm looking at fiscal AI, that's growing at 75% year over year on a quarterly basis, right? So revenue is going to reaccelerate at 35%. If you look at the SBC, which I just mentioned, that's usually the largest operating cash flow expense, right? So, and also software stocks, they tend to expand gross margins as they continue to grow dramatically, because of the fact that software scales so much better than, like, let's say an infrastructure company or even like a chip company, right? Like chip companies and hardware companies are known to have low gross margins because it costs a lot and scaling out is more linear versus exponential, right? So Zeta can release, a brand new server, whatever, that will be able to serve additional clients while making their software more efficient. And that's why that profitability point is exponential for a lot of software stocks on an operating standpoint and gross margin standpoint. So all those things put together, while reducing the most costly factor of software stocks or companies, which is SBC, which is already decreasing, it's like it's going to become more profitable, right? And it's just people are like, oh, well, they're not profitable yet. If they are profitable, they're only profitable by like 2% net margins. Like, well, brother, the stock market is forward looking, right? So if you want to sit here and wait until they hit 20% net margins, you're going to be late. Like, you're going to be very late. And a lot of this is modeling things out and I don't know, some people, they want to buy their favorite Furu's stock. Go for it. That's what you do. But like, this is blatantly in front of you, right? This isn't like hidden where it's like Palantir. It's like, oh, well, I got to time the AI market correctly and I got to do all this stuff. Like, but let's be honest, a lot of Palantir's growth was on the fact that it's a very good business, very well managed, but also it was like the beginning of a massive bull market, right? So I think for Zeta, we do need the bull market to continue. If this bull market ends, I don't know where Zeta is going to be in like a year, right? Like if you have a bear market, Zeta is probably going to go down. It's a high growth stock. But if we continue for the market to stay bullish, we'll see.
I will agree they're hitting the stride at kind of like not the best time. I will say that, right? Because of where the market's at. We've had a ripper rally since April. We just had an 8% pullback, which was the first pullback we've had more than 3% since the April lows. So, and we're kind of like, I don't know who's technical on here, but you kind of see like these rumblings and similarities between beginning of 2025 and now with the charts and like kind of like what's happening. So, and then we also have the Supreme Court news coming up this Friday. So yes, to not get too into all that, I do agree. Like, yeah, I mean, I can't wait till the comments. If the markets do go down 5, 10, 15, 20%, whatever correction, I can't wait for the comments calling me stupid again because I'm invested in Zeta and I called this name out. And it's just funny though. But yeah, Zeta could have a $70 year if you have another, 10, 12, 15% run up in the markets. If the market doesn't, the market takes a crap, you see a correction this year, well, then we might end the year here where we're at right now. But in long-term investing, I don't think like that. I think about where is this company going over the next 2, 3, 5 years from now. And I just see massive acceleration. And yeah, my simple valuation here, intrinsic value of $28 right? $28, $29, 21% undervalued right now. But get this, that's based on 5 years of 20% revenue growth. Again, they're about to do 35% in 2026. They've been doing 20%. So that's super conservative. Only getting to 14% free cash flow margins, which they're at 12.7% right now. And they're
Yeah, it's
guiding for
undercutting
14%.
Yeah.
What's that?
You're
Yeah, it's
being
undercutting
very
it hard.
conservative, which is good.
Very
Yeah.
conservative. And then a 20 terminal free cash flow in 5 years. And you have 21%. Let's say they do 25%. Let's say they get the 15% free cash flow margins. And let's say they get a 30 terminal free cash flow multiple, which would be fair for growing over 20%. Then you have a $53 intrinsic value today, $75 5-year price, 26% implied CAGR, and 123% off its fair value today. So, you know, you could do basic math. You can run an EPS model too if you wanted to, rule of 40 peg, right? But then you just have to kind of tweak some things and just realize, okay, they're not profitable right now. Where do they get to in 2026, right? Do they need to get to 5 cents? And then from 5 cents, how much are they growing from there, right? If they're growing 30%, 40%, 50%, who knows, right? So that's the thing. How profitable do they get and how fast does it accelerate?
Let's not scare people with that overvalued thing over there. We might have to adjust that real quick so that way the people who pause the screen aren't like freaking out. Wait, the thing is overvalued.
Let them. Hey, give me your shares. I'll take your shares right now. Take them right off your hands.
Brad, we will find you a buyer. Don't worry. We will find you a buyer.
Yeah, it's I mean, we were just talking about this right before we started the video. When typically you get everybody it feels like everybody, right? Your whole feed is talking about Zeta, and it's the new retail favorite. Typically, when you get that, it's typically time to take some trim and take some profits and sell out. But the thing I will tell you from being in this name for 7-8 months now, we are so early. Like, no, you don't get to buy it at 13, 14, 15, where I started my position. But you just have to look at where it's valued now, do your own projections, get confidence, conviction in the stock if you want. I just think the road ahead, mainly because of, you know, how much total addressable market they have. It's pretty crazy. And that doesn't even include the whole like going from SEO, search engine optimization, into now generative engine optimization. Like if Zeta, well, you know, Zeta is first mover on that. If that really starts taking over things, if that really starts taking over search, the whole generative and running ads through that, like I said in my video yesterday, you are going to see Meta, you are going to see ChatGPT, or you're going to see Gemini, you're going to see Grok, you're going to see all these other LLMs start lining up to bring Zeta onto their program and platform so they can start running ads inside the LLMs. This is what no one understands. All these valuations, everything we're seeing right now, this is strictly based on the numbers we can see right now. Not even Athena, not even the GEO, generative engine optimization. So you have something here where it's their AIP moment. They're already returning, for every $1 spent, they're returning $6. They have plans to get to $10, right? Very similar to AIP. AIP's such a hit because they provide value. They're spending less than they're getting in return. And that is where you're going to see mass adoption of Zeta in the Zeta 1 platform because of that. It's the same playbook that Palantir was running. So if you want to look for a company, the next Palantir, a company similar, Zeta is one of those companies. You either believe it or you don't.
I really think people
said.
need to look into it. Sorry. Go ahead.
No. I was going to say, well said.
Oh, I really think people need to look into the company. I mean, I've been there where I would have my favorite gurus online, and I would like buy. When I say guru, I mean like financial gurus like FinTwit, All Stars, whatever. And there's no negative connotation to people who are like that, because you generally create a large following if you're like really good at what you do and people want to follow you, whatever. But I used to be there where I would buy a stock because like I would like the person who I was listening to, and guess what had happened when I did do that? Like I would either buy it and it would go up, and then I'd be like so happy, and then I would sell like the first cents that I thought I was going to pull back, or I would sell too soon. And usually when it comes to a lot of stocks, people generally sell too soon when in the midst of a bull market, right? So like you have a stock like Rocket Lab, and there are tons of people out there, right? And including myself, but I don't think I sold too soon. I think I rotated something that I thought would work better, and it did. But there are people who even sold Palantir at like $50, right? Because it did a 5 times in a matter of just a few months, and it was like, well, then how high can it possibly go, right? And the thing quadruples from the $50 range, right? And then there are people who buy Palantir at like $90 and then it pulls back to 72. They're just like, man, I'm not going to buy this thing because like I thought it was going to keep going up, right? But if you do your research and you build your conviction by owning it on your own and building your own confidence in it versus borrowing the conviction, which is probably the worst thing you can do, then you're going to have paper hands, whether it's up or down. And the problem with that is that, one, you don't understand what you're investing in, which is, again, that's like essentially the equivalent of buying a house because it looks good in paper, and then you're basically buying it without actually doing the research on the house. You're going to be disappointed, right? But the house is not liquid. You can't just sell it one day, but you could with stocks. And that's the problem. That's the reason why people are paper handing stuff. When you do your research on a company and it pulls back and you know it's a great company, regardless of what the price action is telling you, you're going to buy more, right? Like when Zeta went to $20, I was like, oh, I should have bought more when it was 17. And then it went to $17 and I was like, holy cow, this is awesome. And then that's when I bought more call options, right? And it's like, this is the reason why you need to have the conviction when you buy stuff versus just borrowing the conviction from someone else. Because you know this, Nate, there were a lot of people that got on the Nebius horse when it was $120 and they were buying all the way down to 100 and they were slapping themselves in the face when it was $80, right? And then they sold below 80. And now they're sitting here and they're just like, oh, I shouldn't have sold it. It's like, well, if you built the conviction, you wouldn't have cared, right? In fact, you would have probably bought more, if anything. But, you know, that's why it's like I always urge everyone that, especially what we're saying, this is what we are doing, right? We are not telling anyone to do anything. We're not financial advisors. We're not licensed financial advisors. Well, at least I'm not. I don't know you guys are. But we're telling you what we're doing based on our own conviction. But we earn this conviction by doing our research, our hours and hours and days of research. And I highly recommending everyone does that too, so that way you can build that kind of conviction. And for me, this is a very easy win. Like, this isn't anything complicated, right? Might be more complicated for other people, but like then that means you need to put in more research. But I really think for me, and for just the amount of time I'm working and investing in software, that this is just, I don't know, for me, this is just an easy win. Like, I feel like this is just one of the most obvious plays out there.
I'm with you. I mean, it's shocking. Yeah, I was wondering where you went. It's shocking to see, you know, how undervalued it is, how they've been growing continuously, quarter over quarter, year over year. So personally, I have never worked in the software industry, but I know a decent bit, and to the fact that they're so undervalued at what they're kind of producing, especially at this moment, it is a little interesting to me. Obviously, again, they do have some overhead stuff, lawsuit and other things that they need to get over and will get over. But I feel like it's the same thing when I personally invested in Palantir, when I personally invested in Hood. Like, I had the same reasonings on why I'm invested in Zeta. So that's why I personally love the name, and now we're starting to see a lot of hype, which could be good and could be bad. But yeah.
Hype is only bad whenever you have some hit piece come out on the stock or markets pull back. That's when it could be really bad, because like we were just talking about, people bought in for they borrowed that conviction and they bought in for the wrong reasons. And then next thing you know, everybody's heading for the exit whenever it's 20, 18, 16, who knows, right? and they're mass selling their shares and driving that stock price down, I'll be a buyer, but I can't move markets. I can't move a $5 billion market cap company.
Sure?
So yeah, it's just it's crazy.
Are you sure you can't do that?
And then just so everybody knows, because I know Sam talked about some calls that he bought, and I bought a lot of leaps in this name. And if you hear my son in the background, sorry, he's 3 years old and he's having a tantrum. He doesn't know how to deal with his
Oh, dude, I
emotions.
thought that was my kid.
Yeah, no, it's my kid. He wants me bad. He's like, Dad. I'm like, hold on, brother. But
He's
calls,
telling you to buy more Zeta.
yeah, exactly. I don't know about Sam, but I'm sure he's doing the same thing. The thing I'm doing with my Zeta calls, I'm so confident on this company. I'm muting myself because he's screaming at my door.
You're good. I do have to hop off here, so keep the conversation going, fellas. Hope everyone has a great night. I will be ready to see everyone's comments and thoughts on the Dan Ives interview.
Awesome. Thanks, Nick. Thanks for
Have a
jumping
good
on.
one, guys.
Yeah,
Yep.
see you, Nick. Just finishing up what I was gonna say before my son comes back screaming at the door with his tantrum. The calls that I'm playing and the leaps that I'm playing for 2027 January and then 2028 in January, they're more so about me getting more access to shares. So when you buy a call option, you can exercise that option and grab all those shares at that strike price. So that's my whole thing about it. And when you do this, there is risk with this, right? Because if you do this, you basically can buy more shares for cheaper than you would today if you bought in the money or something. But the thing with that is options can expire worthless. If there's a 2-year bear market, it could get bad, right? So that's the risk I'm taking. But Zeta is one of those stocks that I just love. But my son's back. So go ahead, guys.
Yeah. That's all good. Yeah, that's a strategy that I'm employing here. And it's like a strategy that I just started a few months ago. I actually got the idea from Stock Talk of how he employs a strategy. And a lot of people do it. A lot like there are people who, and I've done it myself, you know, where you buy out of the money stock options and they appreciate massively if it gets in the money or whatever. But for me, it's like I've done that game and I just wait for like short-term swinging, but like long-term holding, maybe like 6 months to a year or more. I generally like to have the in the money option. So then that way, if, like you said, let's say the stock is $50, I don't need to realize a massive tax selling event if I were to sell some of those options or all of them, right? So if I were to, my plan is like, if it gets like 40, $50, there's probably gonna be no more extrinsic value left. It's going to be all interest. And I would like to just convert those options into shares. So then that means that I'm not going to realize that tax event. In fact, I would actually realize a tax loss based on how much I'm planning to, actually, no, maybe at that point. Yeah, no. So I would basically prolong that tax event. Anyways, I don't want to like get into like this whole thing, but it is a strategy that I'm employing. But I know there's people out there who are like own like some out of the money stock options, which is going to be great. But like you're saying, Ron, the further out of the money it is, there's no guarantee that Zeta is going to be like a double in a year. Like I think it's going to be a double in a year, probably more. But
Bearish.
if it's not, I know, seriously, I'm so bearish. But if that happens, those options are going to be worthless, right? Especially when it comes up to the last quarter before the options expire. So
Most of my money's
I'm going to
parked
be
in the money stuff. And then I have a couple like I posted it. I have like a couple $50 ones. And it's like very like small amount, but that small amount can turn into a lot of money if $50 hits or more. So
yeah.
It sounds like your son bought Zeta puts. So
yeah, for real.
feel bad for him.
He's trying to disrupt this stream so bad. He's so short, dude. He's so underwater, man. He's so
I actually
he's got it.
I'm going to join
his thing.
I was going to say I'm going to join up from my phone. Be able to share my video and stuff, but I'll still be around on the stream. I think it'll still go on. And there's like a little bit of a lag. I don't think there's going to be a lag when I join on my phone. So I apologize if I'm cutting you off. I really don't mean to do that.
Well, I was actually going to end it.
Been fine. Yeah, I think it's a good time to end, right, Johnny?
Yeah.
Yeah.
Okay.
It's more authentic. It's better this way.
It's very authentic. My wife just looked at me with devil eyes and just said, like, he's like
End it
attacking.
now.
He's attacking her, and she's like getting beat up. So I'm gonna end it. I'll let you guys close out if you don't mind.
Awesome. Yeah, with that one, guys, we appreciate you guys tuning in. Please don't buy Zeta puts like his son did. And we'll see you guys on the flip side. Appreciate it.
All right. Later, guys.
See ya.